everyone. I am Shekhar from Momentum Lab. Today is 30th of November 2024. So, like every month end, I do the monthly review and see how the portfolio is doing and also give some insights on the market. And none of this is a recommendation. I'm not a SEBI registered advisor nor an analyst. So, it is purely for educational and knowledge purposes. So, let's take a look at the markets first and then we'll come to the portfolio that I do. The observation that the small cap and micro cap indices are doing better than the large caps. So let me show that first. So let's start with the Nifty 50. As you can see, the red color line is 200-day EMA and the black color line is 100-day EMA. Nifty 50 undercut the 200-day EMA, bounced back and took a resistance at the 100-day EMA. Same is the case with Nifty Junior, undercuts the 200-day EMA, bounces and faces resistance at 100-day EMA. Let's take a look at the mid cap. Same thing, but it doesn't undercut. It bounces from the 200 EMA and is now facing resistance at 100 EMA. Now let's go even down and check the small cap. Now small cap doesn't even touch the 200 EMA, bounces from these levels and closes above 100 EMA in a solid green candle closing. Now the closing of or the place where the small cap 250 index bounces is at the earlier support. Now let's take a look at the micro cap. In fact, micro cap doesn't even touch the 200-day EMA. In fact, it is placed between 100 to 200 EMA where it takes support, similar to the small cap. The support is where it has taken the earlier support as well. So it takes support somewhere in between the 100 and 200 EMA and bounces back and stays way above 100-day EMA and closes there in a solid green color candle. That's the first observation. The second observation is that take a look at the all-time high, or how far away is the market from its all-time high. Let's take a look at the Nifty 50. It is around minus 8.3%. So the Nifty 50 is down from its all-time high by around 8.3%. Whereas if we take the same case with small cap or micro cap, let's start with the micro cap. It is down by only minus 3.8% in terms of micro cap. And if we take the case of small cap, we are down by minus 5%. So the large cap indices and mid cap indices are finding it difficult, whereas small cap and micro cap are not, which is usually the reverse, but there's a peculiar case. I do not know the reason why. I'm just showing the observation that I made. Now that's about the market. And if we take a look at the overall markets, Nifty, when we compare with the global markets like Hang Seng or Nasdaq, or even the commodities like gold and silver and debt, Nifty hasn't overperformed the other markets. The outperformer in this calendar year has been Nasdaq. So we've almost completed this year. Just one more month is left. So in the first 11 months of 2024, Nasdaq went up by 34%, and in the last 6 months it went up by 14%. In the last 1 month, it moved up by 3.3%, being the top performer. The next was the Hang Seng, 28, 7, and 0.6 respectively for the 12-month, 6-month, and 1 month. Then comes the Nifty 50. Actually, Nifty 50 is also after gold. Gold did better than Nifty 50. It moved up by 28.8% in this calendar year so far. Then comes the Nifty 50. And after that is silver bees, and then obviously the debt. So if you see the recent month's performance, silver and gold have lost quite a bit. If not for this month, in fact, gold would have been comparable to Nasdaq or maybe Hang Seng. So that's the scenario as of now. And if you take a look at the sectors, IT sector is the standout. It moved up by 3.5% in the last 1 month. And on the flip side, energy, commodities, metal, these have performed very badly. That's at the sector level. Now you can also take a look at this sheet and see which stocks have done specifically really well. And we have given the relative strength. The relative strength is similar to what what Market Smith does, and you can find the top stocks where you can hunt some great stocks for any of the discretionary trading ideas. Now that's about the markets. Now, so let's start with the momentum portfolio that I have. So this portfolio consists of 25 stocks picked from the universe of Nifty Mid Small Cap 400, rebalanced every monthly. And the top 25 stocks are selected based on their last 6 month and 12-month rate of change. I also have another exit criteria that if stocks move below 30% from its 52-week high, then I exit that stock the next trading day. So with that as the logic, I've constructed this portfolio. Let me check. Let me show you guys the performance over the last couple of months. I'll zoom in a bit. So this is the performance since April 1st, 2024. The first 2 months were really good. April and May, we had excess returns as compared to the Nifty 200 index. And after that, we had given those excess returns, the index did well. And again, it flipped in August and September. October, the flip again happened where the index did well. And now in November, again, we see the flip happening and we performing better than the benchmark index. Right now, we are an excess returns of 1.7%. And I also believe that moving to the mid small cap 400 is also partly aiding to the improved performance in this month as compared to the benchmark, because the benchmark is in the large cap space, whereas the portfolio is in the mid small cap 400. Now, the question might arise that why am I comparing mid small cap 400 index with Nifty 200? So I'll tell my framework or point of view of how do you identify the right benchmark. So I believe that when you're comparing uh, your portfolio with a benchmark, the benchmark should be selected in such a way that if not for this strategy, where would you invest your money? So if I answer the same question, if not for this Nifty mid small cap 400, I would go and invest my money in large or large mid cap space because I'm comfortable only in those area. So it would have either been Nifty 50 or Nifty 200. Now, since I've taken some risk and allocated some amount of money, which ideally would have gone to Nifty 50 or Nifty 200, I've removed some money and allocated in a more riskier strategy like this momentum, which has a universe of Nifty mid small cap 400. Now, even though I'm investing in this universe, which is different from my earlier universe, I always compare with Nifty 50 or Nifty 200 because the returns that I'm going to get from the strategy, if they are better than my earlier index, then my job has been done. I've achieved what I set out to. That is to beat the earlier benchmark where I was comfortable at. Now, the secondary metric can be whether the Nifty mid small cap 400 within that universe I'm running this momentum strategy, did it beat the Nifty mid small cap 400 momentum strategy? That can be a secondary metric. But for me, the primary metric will always be where am I going to put my money, if not this strategy? That will be my benchmark. So, someone who's, let's say, comfortable um, investing, let's say, their entire money in Nifty 200 momentum 30 index, for example, then if they set out that, okay, no, I don't want to uh, do this Nifty 200 momentum 30. Let me search for some more better alternatives. For them, the benchmark will be Nifty 200 momentum 30. So benchmark will be a subjective, it will be a personal choice. Wherever you are comfortable, and if you want to go out of your comfort zone, then your benchmark will be with respect to that comfort zone. So for me, that that is the whole point of view. I just wanted to summarize this, and I've seen a similar kind of reasoning provided by Deepak Shonai on Twitter. I'll share that link also. Take a look at it. There was a detailed discussion of someone asked like, why are you comparing your PMS benchmark with Nifty 50, where your PMS is picking stocks from the Nifty 500 universe. So it echoed in the similar lines. So having said that, so my Nifty mid small cap 400 momentum strategy will still continue to have the benchmark as Nifty 200, and the secondary benchmark will be Nifty mid small cap 400 momentum 50. 50 or momentum 100, I believe, with that index. So apart from this, I also was tracking with respect to Nifty 200 momentum 30, just like how I was tracking with respect to Nifty 200. So my alpha with respect to Nifty 200 is 1.68, whereas with respect to Nifty 200 momentum 30, which is this index that I track, this is a secondary index. With respect to that, it is at alpha of 1.02. So far, so good. But ultimately, what is going to happen is this index might change. I may not be able now. I will not be comparing with Nifty 200 momentum 30. I will stick to mid small cap 400. But the base benchmark of Nifty 200 will continue to remain. That is, this Nifty 200 will continue to be the base benchmark. Now, having said that, that's the strategy's performance so far. The XIRR is at 11.72%, and Dixon is the outperformer in my portfolio, close to 63%. And the current drawdown is at minus 8% from its all-time high. That is the momentum strategy. Let me now show you the factor strategy that I'm running. The factor strategy is pretty simple. It is a multi-factor combination of momentum and low vol, equated allocation. That's it. And for this strategy, I'm comparing it with Nifty 50. Same funda. If I was allocating some amount of my money in the index, I felt that let me take some money away from the index and do some quant strategy. Now, with that quant strategy, if I'm doing the investment, I want to see that at least I'm able to beat what earlier I used to do, that is with Nifty 50. So that's the base benchmark. A secondary benchmark, I'll have to decide for this. Since it is a multi-factor combination, I haven't figured out a right one, but let's do with the primary benchmark, which is Nifty 50. So this strategy is underperforming Nifty 50 by minus 1.63 or minus or 163 basis points. So you can see the NAV movement of this strategy also. The blue colored line is the multi-factor and red color line is the Nifty 50. So that's how it has been. This strategy I've started from 1st July 2024. That is almost five and a half months, I believe. Yeah. So that's the picture so far with respect to my multi-factor as well as the momentum strategy. I'll be covering the research paper that I just talked about, CAPE, in the coming week. That's all, guys. Have a nice day. Bye.